Hi guys, welcome back. This is Trader Stewie again with you with the art of trading.net. Making you guys another video discussing a trade that we did today at the art of trading. Um, Anybody who traded today knows that today was a pretty ugly day in the market. Right from the get-go, the Dow Jones, S&P 500 and Nasdaq both gapped down about 1% on each index. It was a very, very ugly open. And right from the open, we gapped down below some major support levels um, until uh, until we uh, until we saw a little bit of stabilization shortly after the open. And a number that we were watching on the S&P 500 was that 1300 area, which was obviously a very, very big, important area as far as chart support, as well as psychological round number support at the 1300 number. So basically, indexes gap down, tested S&P 500 gap down, tested that 1300 area, and it was more or less flirting between slightly underneath it, slightly above it for the most part of the morning. So basically, um, when I saw the gap down in the market, one stock which really really caught my attention, and one sector actually more than just one stock was the agricultural sector, the ag stocks. And this stock, POT, to be more specific, really caught my attention. It's not a stock that I usually trade, but given what I saw today in the stock, I just had to take a position in it. And let me just explain why. A lot of traders in the chat room, um, they know that this is not really the kind of trades I usually take, but they were just curious why I took it. And obviously, thank God it worked out. But it was a pretty, you know, easy trade if you just look at the mechanics behind it. So basically, what happened is when I pulled up the stock of pot, this is a stock that I've been watching for a while, and I've been keeping it on my oversold watch list. This is a stock basically that took a beating for several days in a row. This is a you know it's a very very well known stock. It's a very very followed stock by many traders. It's a very very volatile stock. So it can move up and down, with nice aggressive movement. So if you time your entry right in a stock like pot or some of the other ag names, you can pretty much be sitting on a pretty good trade. So basically, what I saw in pot here, obviously, if you take a look at the daily chart, the first thing that caught my eyes was this kind of obviously this pattern here where you see the stock has rallied here, for a number of weeks in 2011, right from the start of 2011, the start going up, pretty aggressively. And you can see how here, boom, it started just falling down here. It just took a 2 or 3 days of a serious beating here. And usually when you see something like that, that usually tells you that the stock is nearing a top. So, just whenever you see a stock that gaps down like this aggressively and moves down 2, 3 days in a row like that, this is not a normal pullback. This is a more of an aggressive distribution type, action. Whenever you see that, you can pretty much, be assured that some big, big money is leaving the stock for whatever reason. But basically, so the stock took a beating here for 2 or 3 days and then came back up. And you can see here, by it coming back up, it created sort of like a kind of like a head and shoulder pattern. You can see here, this is the left shoulder right here. As the stock moved up again, this is kind of like the head of the head and shoulder pattern. And as the stock dropped and then came back up, it attended kind of like a weakish bounce. I mean, it was a good bounce, but in the overall scheme of things, it was not a strong enough bounce to get you over this high. So that left you now with a right shoulder and basically a head and shoulder pattern here. You can see that very clearly here. So as the stock came down, it topped out around $62.35, 62.30 right here. And it took, look at that, guys. It took a beating for 1, 2, 3, 4, and today was the fifth day in a row. Now you go take a look at the stock and tell me here. Look here, guys, on the chart. Have you seen the stock be down more than 4 or 5 days in a row without seeing some kind of a bounce? I don't know about you guys, but for me, I can't really see it here, and not anytime in the most recent past at least. So you can see here right away the stock caught my attention because it fell down, 5 days in a row. It fell all the way from $62 all the way down to 54. So that's a pretty good, that's a good about $8 move for the stock, which is pretty aggressive. So basically, this is what I saw on the daily chart, and then not only that, you don't want to just buy a stock just because it's down 5 days in a row. That doesn't make any sense. That's too it's not that easy. What you want to do is you want to make sure that there's a confluence of support nearby. Basically a validation where, hey, if I enter the stock here, would this be a logical area, and where would be a good stop loss area? So basically, when I saw the stock here, it caught my attention this morning as the stock was dropping and the market was tanking. The Dow was down about 200 points, literally right off the open. After the first 30, 45 minutes after the open, I saw the Dow was down about 200 points, and I knew that, hey, it was the Dow S&P at 1300. That was going to be short-term support, so we're expecting a little bounce in the market as well too. So not just for this stock, but maybe in the market, maybe you can get like a confirmation with both for the market and the stock to enter this position. So you can see here we're entering into this congestion zone here. This is a support zone. You can see how you had here this low here around $54, and you have this area here where it's around 54. These lows here, this pivot low here around 54. You had here a gap up here that could be seen as short-term support here. So you can see, and it came back, and not only that, guys, look at this red line here. That's the 100-day moving average, and boom, the stock dropped right on it. So now you have, basically, two or three good reasons why you want to enter the stock. It's very, very oversold. The market is oversold now. The stock is testing the 100 moving average. It's approaching a level of support right here. It's down 5 days in a row, down $8 in 5 days. That's a pretty aggressive move on the downside. So right away, the stock caught my eyes for a long position. So now that I figured out that, hey, the stock on the daily chart looks pretty attractive for an entry here. Right away, you like I do with all my trades, you go down now to the 5-minute charts and you zoom in. Okay, so here we go. This is the 5-minute charts, and you can see here, guys. Look at this big gap down right up from the open. Huge gap down. Stock, gap down pretty much about $3 right from the open. Um, so you can see here, gap down. Uh, Opened here and it continued to tank all the way down to 53, and then the stock started to bounce. Okay, now usually for the first 30 minutes, 45 minutes of a trading day, I usually don't like to do anything. I usually like to just sit down and just watch the action. Let the first 30 minutes, 45 minutes, let all the weekends, or whatever you want to call it, let everybody get shaken out, and then wait till the dust settles, then see what kind of a setup you're left with here. So pot for me, I sent out the entry, I sent out the alert to my subscribers when the stock was around right over here, around 54, 53.40. Okay, that was my entry. 53.40, right around right here. So basically you enter here, my stop loss was, I gave it about a dollar 25 below my entry. If you really want to be a short-term trader, you could have pretty much put a stop loss here at the lows of the day, which is 53. But given that the market was very, very volatile, I want to give it a little bit of a cushion. I knew the stock is going to bounce. I just didn't want to get stopped out, for by a minor tick lower, and I see the stock rip without me. So I went with a looser stop of around a dollar 25, on the stop loss. So the entry was here, guys, 53.40. So I sent out the alert to my subscribers. As you can see, the stock, it started to work, pretty well. A lot of subscribers picked up on 53.45, 53.50, 53.40. So right around this area is where most of my subscribers, the people who took the trade at least, got in right around this area here. And you can see how it came back up a little bit and then kind of dipped a little bit lower. But as you can see, that dip, it never really looked very threatening, because you can see here you had a low intraday low here. That was the initial low right from the open. The stock rallied and it came back down, and look at that, guys. It created a higher low. See that? So you have a low right here. Okay, perfect. Now you know that this could be a very firm stop loss if you decide to enter the stock anywhere above it. Okay, but you want to see for more confirmation. And I got my confirmation right here, guys. We got a higher low. So you have a low, a higher low. My entry was right here, okay, at 53.40. The stock came back down, and look at that, guys. It created yet another higher low. So right away, right when I saw this, I knew I had a winner on my hand. Right when I saw this pattern right here, I felt pretty comfortable that, hey, this stock, I think it's gonna work. So the stock continued to run, and I kept emailing and making the calls out in the chat room to raise stop losses, and we kept raising the stop loss, above these pivot lows, right underneath these pivot lows. So we moved the stop loss to here, then here, then here, and then as the stock continued to climb, continued to climb, I decided to sell the stock right around right here, 54.80. And as you can see, we kind of lucked out a little bit because that was pretty much very near the high of the day. So I sent out the sell alert to my subscribers. Also called it out in the chat room as well to sell the stock at 54.80. Entry was 53.40. So we made about $1.30, $1.40 per share on this trade. Which is about 2.5% gain. Not bad. Given the fact that you're playing a long position. When the market is taking a 200 point beating. Taking a 2%, 2.5% gain. $1.40, $1.30 gain. That's not bad at all. You always want to be booking profits when you see stuff like this happens. And as you can tell, we sold it right around here as the stock spiked here to new highs. But look at the volume was not there. This is why I sold it, because the stock broke out above this little pivot area here, pivot high here, broke out. But look at that, no volume. So when I saw that, I figured, hey, you know what? Might as well book the trade. Good enough trade, 2.5% in a down market, in a very, very ugly day. Not bad. Can't be greedy. Book the gain, close the trade, and then move back to cash. And as you can see, the stock continued to dwindle lower from there on. So it was a good decision to get to sell the position at that point. So anyway, I hope this helps, guys. And this is just yet another trade, that I do here at theartoftrading.net. This is the kind of trade that I like to do only when the market is taking a beating right from the open, and a stock that I'm watching has been down several days in a row and approaching a level of support. This is the way that I play oversold the bounce plays. All right, guys. Best of luck tomorrow.